If a big booty Latina doesn't let me drive my miniature Lightning McQueen on her bazookas, I don't want that bridge. Cars is awesome. There are only two canon events in the life of a modern degenerate: an unexplainable obsession with the Cars franchise and losing your entire net worth on a trading app. The US government took away from us what mattered most: losing your net worth trading Cars 2, because the corrupt elite decided to ban all Cars 2 trading activities on Wall Street. This is not even a joke. There's basically an infinite amount of things you can lose money on in the US futures market: oil, corn, electricity, rare metals, metal pipes. You can even gamble on the weather. The only two things that ever got hit on the Wall Street ban list are onions and movies past the original Cars. Let me explain. The year is 2007. A visionary risk manager from Arizona registered a new company called Media Derivatives Inc. His government name alone shows you how much of a baller he is: Robert Swagger. Robert had a generational vision. He wanted to create an electronic exchange where people could trade futures contracts based on box office performance. The idea was simple. Anyone could buy a futures contract on an upcoming movie at a predicted price based on expected box office revenue. Depending on whether you bet it would exceed expectations or flop, you would win or lose money. This was Da Vinci levels of genius. The people needed more things to gamble on in their lives. Going to the movies is fun, but betting money on it is a fun amplifier, especially if you're watching a kids movie with your son. It's the same with sports. Watching your favorite team is exciting, but sports betting makes you 10 times more passionate. It was also a massive opportunity for production studios. Making a movie costs a ton of money, and you desperately pray it pays off. The original Cars cost 70 million to make, and the revenue was more than triple the budget. But the Marvels, for example, lost $250 million. This exchange could help studios manage financial risk and attract new investors for smaller, independent filmmakers, because they are the ones who shape the industry and push creative boundaries with cinematic masterpieces like Sharknado or Cocaine Bear. But Robert wasn't the only one who saw this potential. The investment bank Cantor Fitzgerald spotted this opportunity even earlier. They acquired the Hollywood Stock Exchange in 2001, which was a popular online fantasy trading game where users bet Monopoly money on box office predictions. The game had over 1.6 million players, and the bank wanted to turn this into a legitimate exchange. Unfortunately, they couldn't launch it at that time because of a small incident, just a minor technical problem. Their headquarters were located in the World Trade Center, and more than 50% of their employees despawned on 9/11. Understandably, this idea got pushed lower on the priority list. Anyway, quick time skip to 2010. Both companies were competing for the same market. It was a case of first mover advantage. Whoever launched their product first would instantly build brand recognition and capture a massive share of the new market. They both had their own strength. Cantor Fitzgerald had unlimited money, financial expertise, a massive team, and the infrastructure, but Robert had the cooler name. By March 2010, the two companies submitted their applications to the CFTC along with their first movie contracts. Robert chose Takers featuring Paul Walker, and Cantor chose a Sylvester Stallone action movie. Both were huge summer blockbusters expected to make serious bank, and to everyone's surprise, Robert's exchange got approved first. But for some reason, the contract approval process took longer than expected. You see, before submitting their applications, both companies had been investing heavily in PR campaigns to win over the movie industry. Turns out Hollywood was having none of it. They were ready to spend millions in lobbying money to stop this venture entirely. Just one day before the final approval, the Motion Picture Association of America sent a letter to the commission attempting to shut down the whole thing. They argued that box office receipts weren't commodities like oil or metals, so the CFTC shouldn't approve them in the first place. They were also worried that studios would deliberately sabotage their own movies to short them, which was a stupid argument. Hollywood has proven time and time again that they will release atrocious trash movies even without any ulterior motives. When Cantor and Robert found out about the massive lobbying efforts by the MPAA, they were forced to set aside their differences and work together to counter them. They spent tens of millions on their own lobbying efforts, but this was nothing compared to the power and political connections of the Hollywood industry complex. The most high-profile opponent of the two exchanges was Senator Blanche Lincoln from Arkansas. She introduced a financial reform bill with a rule that banned box office futures, and she actually led the Agriculture Committee, which had authority over the CFTC. Robert had a public crash out, and rightfully so. because apparently Lincoln's sister Mary Lambert was a well-known Hollywood director. Even though their movie contracts eventually got approved, Robert and Cantor knew they were cooked. Just 2 days after Cantor received the green light from the CFTC, the House of Representatives passed the Dodd-Frank Wall Street Act, and of course it included the ban on box office trading. The Senate also passed the law with a vote of 60 to 39, and it was signed into law by Barack Obama on July 21st, making box office futures the only banned commodity in the US besides onions. Robert lost over $30 million in the process, Hollywood won, and we degenerates had to suffer because we would never be able to do lobotomized 50x leverage trades on a kids movie about talking cars.